Welcome to the show. I am your host, Lex, and today on the Lex Factor, we have Mr. John Carter of Simpler Trading. He is the founder. So we got the big dog today, and we're going to just break some things down. He is a super successful trader, and we're going to learn all about a few things that he has built and uses in his trading life. So stay tuned for that after the bell. I told you about the music. There it is.
Lex. That was awesome. I'm fired up and ready to go.
Doesn't last long. Don't worry. John, thanks for coming on. This is awesome. We were talking pre-show a little bit. We met a long time ago in Austin, Texas. I'm not sure I'm supposed to give your location away, but
it's all right.
It's general.
We all have guns in Texas.
We all have guns in Texas, right? Excellent. So you're the founder of Simpler Trading. Give us your background. Give us a bio on you, because you got some big time stuff going on.
Yeah. So the very compressed version is that as I was growing up in a household, I had a stepfather who was a broker and kind of got me accidentally intrigued into options. I messed with it all through college. I got a job after college, worked in the corporate America for 4 or 5 years. Mm-hmm. And during that whole time, I was trading options. And I took 3 accounts from like 10,000 to 100,000, blew up the first one, blew up the second one, blew up the third one. And it was this horrible story. I've got a book out, Mastering the Trade. I talk about it, how this was the money I was going to use for a down payment on a house.
Oh, God.
Screwed that up. And that really got me into this whole thing of, okay, I can make money. Why am I not keeping it? And mm-hmm. I kind of discovered Mark Douglas, his book, Trading in the Zone. Mm-hmm. We became friends throughout his life, and he was a mentor and a coach for me. And I really what it came down to was that the short end of this, and kind of led me to, the path that I eventually took on, was that, whenever I focused on the money, all the bad habits that come into trading came into play, and it literally took over my psyche. And mm-hmm. It's almost like it was, outside watching in, making all these mistakes. When I just kind of switched gears and focused on the setup and really just zoned in on the setup with no preconceived notions of what the money needs to look like, mm-hmm. then the money would follow. And anytime I find myself in like, okay, what's going on here? It's somehow I'm like, oh, I'm focused on trying to make money. Gosh, okay, let's get back to the setup. Right. Okay, awesome. So let me ask you a couple questions about how you would characterize yourself. So, and what I mean by that is, the retail world is very different. It sounds like you came from an off-floor trading situation, maybe on a retail side, as opposed to the market making side on the pro, down on the floor making markets. Is that safe to say so far? Yes, and I had exposure to kind of market makers, but I was never on that side of the market.
Okay, so I envy you. Okay, because I was on the market making side, and what that taught me is how terrible of a retail trader I am. Okay, that's what it taught me.
Okay,
believe it or not. So you have developed a skill. Okay, and we're going to get into some of this in a bit of managing, the ability to get into a market with some edge, right? Because the bid offer is the market maker's edge. And you have to find a way to get in, first of all, and then be profitable, second of all, and be a risk manager, blah, blah, blah. So that is envious, because that's a real skill. And that's what our whole world is all about now, is teaching folks in the retail community, what are good setups and that sort of thing. Would you consider yourself more of a day trader, more of a swing, little more of an investment? How would you characterize your strategy or style?
Well, if I look back to, so I like trading. And so there's pros and cons of different styles of trading. Mm-hmm. So I like day trading. The cons is it takes up a lot of time and a lot of attention.
Sure.
And so I've kind of got this philosophy of, like, if my goal, and we were just talking about money versus setup, but let's say that you're trying to make $1,000 mm-hmm. Over the course of a week. Mm-hmm. Now, do you make that, $125, $150 a day doing 5-day trades, or is there one swing trade that you could do? That would do it. So it's that efficiency kind of a thing. So I think in my perfect world, I would look at the markets for the first couple of hours of the day, set up 1 or 2 option type trades, maybe a futures trade, and then look at my small. I like a kind of smaller number of positions, but larger positions.
Okay.
and just kind of look at those. Is there any adjustments I need to do? But in a perfect world of trading, look, and even though I like it, I could be in front of the computer all day, and sometimes there's days that I am.
Mm-hmm.
If I'm looking at quality of life, like, okay, my
Sure.
wife wants to hang out with me, my kids want to hang out, like, oh my God, all these things, I've found that I need to balance that out too, because it's very easy. It's, I love being behind the screen. So I try to adapt trading to lifestyle goals as well as kind of income goals.
Okay. That makes a lot of sense. Yeah, I think one thing I picked up on, you talked about the money versus the setup, right? And don't focus on the money. And I think that's critical for folks to understand, especially beginners. And I had the same problem when I first started in the industry years and years ago, is I thought about the money. And it wasn't my money either. So I got backed. I got lucky. Someone put up a sum of money, and guess what? In 6 months, I lost it all. And they liked me enough to say, "You're going to make it, kid. Don't worry. Hang in there." They put up another sum of money, started losing a little bit, and I finally figured something out. And guess what I figured out? You just said it. I stopped thinking about the money losing and making, because it made me feel uncomfortable. And I started thinking a little bit more about, like you said, it wasn't the setup then, but it was about the management of my inventory.
Yeah. Okay.
Which really, ultimately it made me a gigantic success in that industry, thankfully. But man, I'll tell you, I had a failure. Right. It sounds like you had a failure too along the way, and you really learn a lot from those things, I think. Right.
Well, I think it's really part of tuition. And I think the tricky thing with trading, I talk about this where, just because, say, you play a video game where you're flying a plane doesn't mean you can go hop in a 747 and, take 300 people to Paris. Right.
Right.
And it's the same thing in trading. It requires zero skill to make money in a trade. So you can be brand new, you get a computer, you download everything, you push a button, you're like, hot damn, I just made $500. I'm a genius. The skill comes over the course of 100 trades. Did you end up with a net profit? What was your biggest loss? That's where psychological management comes in.
Right.
And the biggest issue I've found is if I'm sitting there going like, okay, for lack of, I want to make $1,000 today. What happens in that situation is that's the main thing. And so there's this like FOMO, gunslinger mentality of like, well, let me just throw on this trade.
Right.
And then if it's down $600, you kind of don't take the loss because you're focused on making money.
Mm-hmm.
And it's this real weird mind game that will, and if you can't get over it, essentially there's few guarantees in life, but I guarantee you'll never be able to make it as a trader if you kind of unconsciously have that attitude versus like, all right, I don't know if I'm even going to place a trade today, but if we get to 57.70 on SPX, I'm selling a call credit spread. More of an if then kind of a scenario.
Sure. Makes sense. Okay. Yeah. I always find the reason I ask so many questions about this is because I still interact with the retail community nearly every day. I do a lot of demos on our system. Inevitably, something leaks out that I've been in the industry for 125 years, and they're like, wait a minute, you might know something, and they start asking me questions. And what I think most people don't understand, and that's the reason I pressed you on this a little bit, is that the great traders have a very solid risk management profile, right? And whatever it is, yours might be different from mine, but they have it. And some people call it a trade plan. They know when to get out. They have exit strategies. Maybe they even have an exit plan before they even put the trade on, which is terrific, wonderful. And you see those that sort of discipline in all the great successful folks in our business, I think. So I want to really emphasize that about you, especially because you speak to it so well. So that's why I kind of tackled that a little bit and wanted you to speak about that to some degree.
Well, so one of the benefits of being in the industry for 125 years is that you've seen a lot. And so I think if there's an edge between if we've been doing this for a long time versus if you started 2 years ago. And now, believe it or not, there's also an edge if you started 2 years ago because you don't have the baggage, of 30 years, right?
Yep.
But the advantage of being in the markets that long is you've done a lot of reps. And if you've got your head on straight and your neutral state of mind, you've seen things before. And so, August 5th and 6th, when the market plummeted, I've seen that many, many times. It wasn't a big deal. But for someone that was new, it was like, oh my God, what's happening here? And it can result in like huge mistakes and things like that too. Yeah. But, at the end of the day, the markets, my father would tell me this. Like I was like, oh, I missed this trade. He's like, I guarantee when you wake up tomorrow morning, the market's still going to be there. And, and once you understand the market is like this big ocean.
Yep.
And there's going to be waves, and it's your job to read the waves, and it's okay. You can go out surfing, but you're never going to come back depressed after surfing if you didn't touch all of the water, right? If you caught a couple of good waves, you're good. And it's the same thing in trading. You got to be patient, understand the setup that you're looking for. And then, when that wave comes, hop on the wave, and don't try to surf when there's nothing to surf on.
Yeah, understood. Those are great points. All right, let's get into some of the detail here. So you have this, I'm going to call it an indicator. Correct me when I'm wrong. Squeeze Pro indicator. Is that accurate?
That is the correct term. Yes.
Okay, got it. And just so all the folks know, we have a new relationship, the Squeeze Pro indicator and Simpler Trading with Tradier. I believe we've embedded it into one of our platforms called Tradier Pro, which was formerly TradeHawk. So I know it's there. Unfortunately, they haven't given it to me yet, which really stinks. But tell us a little bit about the Squeeze Pro indicator and the launch, if you know anything about the launch. I'm not sure. Neither of us are on the inside.
Yeah, so I think we established neither one of us know exactly the
Unbelievable,
details. Right? But we know that something's happening.
Something's happening. Okay, good.
So this was kind of born out of my first 8 years of frustration in the markets. And so the things that I kind of noticed were, it's like, wow, it seems like the markets have these, what I learned later was a greater than expected move about 20% of the time.
Yep.
And then maybe 80% of the time, they're just kind of, directionless. And so what I noticed was when they were directionless, at least with my style of trading then, I was buying calls and I wasn't making any money. But then when there was direction, I'd kill it. And it's like, okay, well, can I narrow down the times when it's kind of directionless so that I don't utilize this strategy during that time, and up or down. Sure. And so the squeeze, what it does, and the loose relationship is between the Bollinger Bands and the Keltner channels and momentum.
Okay.
And when that compresses to a certain amount, it's called a squeeze. And it's like, if you think of like if you're holding like a puppy and you're holding it, at some point it's just like, it's got to get out, right?
Sure.
Or Usain Bolt does a 100-yard dash, 100-meter dash, and he's not going to go and immediately do another one. He's gonna sit on the bench, drink some electrolytes, rest, build up some energy for the next race. And it's the same thing with whatever stock you're looking at. It's whether it's Nvidia, whether it's the euro currency, whether it's SPX, whether it's a 5-minute chart, whether it's a monthly chart.
Right.
There's going to be periods of time where there's this release of energy, and then it's just going to. Now today, looking at the SPX today, there was a 5-minute squeeze. A 5-minute squeeze that built up, and at around 1 o'clock, it triggered to the downside. Okay, well, guess what? The markets had a nice down move then, and now this is going to be kind of funny because I wasn't watching that. I was kind of like, I threw on some credit spreads. I was doing other things, and so I missed that. And had I been watching, it's like, okay, boom, there was a 20-point trade. Now, why am I saying that? I'm supposed to only say the things, the successes, right? I totally missed that one.
Yep.
Well, the thing about the squeeze is that it works on all time frames. And so what I prefer when I talked earlier about swing trading is let me look at that on an hourly chart or a 2-hour chart or a daily chart. Now, a daily chart is great. If you got a daily squeeze on, say, like a Tesla or an Nvidia, for option traders out there, you could structure a kind of maybe a 30-day out of the money call debit spread where maybe you're paying 20-25% of the spread, of the width of the spread is your debit. Those can be nice, potentially 2, 3, and 4x trades. And because you're doing that at a time when you have a signal that the odds of a greater than expected move are, upon you versus doing that and kind of crossing your fingers and hoping for the best.
Sure. Okay.
And so that's the main thing.
Yeah, got it. So does it have direction appended to the squeeze? It sounds like it's compression, and you also know what the expected direction is, I should say, right?
That's a great question because I think what drove me crazy about, when I was learning trading, I go to these 3-day option seminars and I'd say, and always I would hear, if you think it's going to go up, you can do this. I'm like, how do you know it's going to go up? And nobody would ever give me an answer. And so with this squeeze, there's kind of a momentum built into it. And so when there's a squeeze and you've got these momentum bars ascending and they're above zero, it's like an 80% chance that when the energy is released, it's going to be the upside.
Okay.
And then vice versa. Now, the chart is just consolidating. It's like, well, is it going to go up or down? But the momentum in the squeeze will kind of give you a heads up like, hey, when this energy is released, this is going to be the downside. You need to be careful.
Okay.
And so that's the piece of it that I really like.
And so do you, with your option strategies then, do you lean in that direction? You put on, bearish type spreads when the momentum looks like it's going to be to the downside? Is that the idea?
Yeah. And so my preference, and of course, I have three main trades. So let's say we're going to get a bearish setup.
Mhm.
One is I might buy a Delta 70 put, and that's just more like, okay, if this thing's going to go, I want to participate. I don't
Sure.
want to be way down there. And then typically I'll throw on an at the money call credit spread. Okay, it's a bearish trade, but it's
Yep.
at the money, more of a 1-to-1 risk reward ratio.
Okay.
Because it's fat. You got a lot
Sure.
of credit there. And then maybe throw on, maybe some, maybe Delta 30 kind of out of the money to straight puts. Because if you get a real dump, then those are kind of nice.
Yeah, those explode.
So you got kind of a nice basket there where if it's just kind of a small move consolidation,
Yep.
you're good. But if you get that, big puke, you get that little extra kicker there.
Right. Now, do you do, I want to make sure I understand, do you do all three of these at once, or are you picking from this group of three that you just described?
I have found that if I pick, I usually should have picked a different one.
That would be how I would do it.
Well, so there's a different, and it also depends on your goals. If your goal is consistency in that case, so let's go back to the bearish example.
Mhm.
Just selling at the money call credit spread or slightly out of the money.
Sure.
That's going to be the most consistent because, if it's going sideways and doesn't actually fall, you're still going to make some money on it.
Yep.
So that's nice, and that's most consistent. And
so interestingly, we were talking about this topic a little bit on my live show when I do it with two other gents, and the idea was if you had a technical indicator, I'll just use that loosely right now.
Yeah.
And you were very, very confident that you could pick direction. Okay. What are the components in your decision making that cause you to do one of these three types of trades? Or what trade would you make?
Okay.
Use butterflies at all? Would you use just naked? So we had a big debate about, I'm going to use a 70 Delta put because you told me it's going to move 100 points. I'm all in on that one. Or, the range might be a little smaller, and maybe I'll do some mixture of a butterfly or a broken wing or something like that. So we had a little debate about that. Do you have some flavor that's the favorite, based on the size of the move in your estimation?
Absolutely, and I love all those trades, and I do like butterflies. I like broken wing butterflies. The main thing I found is that, so it depends on kind of the duration of the trade.
Mm-hmm.
So let's just say that I got a daily squeeze. Now, so here's the other thing about the squeeze, is that when you get the signal, the typical signal lasts 8 to 10 bars.
Okay.
So on a daily chart, that's 8 to 10 days. Hourly chart, 8 to 10 hours. 10-minute chart, 80 to 100 minutes.
Do you ever use the minute chart, John?
I do sometimes, and I just find my life is better when I don't.
Okay.
That's just a lot of like I just call that. That's a it's the same amount of effort for a much smaller reward.
Okay, makes sense.
Thing. So and I get it. If you like to scalp, awesome. Typically, I tend to do best looking at 30-minute charts and above, but I will typically have a couple of 5-minute charts, off in the corner.
Fair enough. Okay. Very good. Yep. Sorry, go ahead.
Oh, well, so butterflies, I like doing butterflies on like say 0 to 1 DTE expiration.
Okay.
But if it's 2 weeks out, I've just found that, at least for me, a butterfly, it doesn't really move much. Like you could get the move. Say, I've had situations where like a stock will move 20 points to its strike. 2 weeks out, I did a butterfly. The butterfly's up 50 cents.
I know, right? Couldn't agree more.
Yeah. So in those cases, my preference would be like, okay, this is really setting up. It looks poised. At the very least, I'm going to do a call debit spread. That way it's like, there's not this offset where I just got to hope it consolidates at the sold strike for 2 more weeks.
Right.
So butterflies I think are great, but you got to just remember there's not much action until you get really close to expiration.
Yeah. That's a good point. Yeah, I agree with you there. So I know I'm taking a step back here because you mentioned 0 DTE, and that's sort of the rage right now.
Right.
Right. At least. Any comments about the 0 DTE world? I mean, I was looking at volume figures the other day from SIBO. 47% of their volume in SPX is coming from 0 DTE. That's a lot.
Yeah, I'm a fan of 0 DTE, and I'm probably going to say something here that's not going to be very popular.
Okay.
For the people that love it. I think 0 DTE is great if you're going to say buy a call or buy a put. Do it in the first 90 minutes of the day.
Yep.
And then be done with that because but there's a lot of things happening now with levels. Locking in the levels. You're magically going to 58.75, then down to 58.50, and I think for newer traders and the uninitiated, it's if you're trying to if you're sitting at the poker table and you're wondering who's the sucker. Right, it's you.
It's you, right?
And I like trading 0 DTE, but I would say that most people would benefit. Just go to 1 DTE.
Sure.
just give yourself that extra little bit of an edge
Sure.
where you've got a little bit more time. You could possibly even hold it overnight.
Yep.
Your chance of recovery is going to be a lot better. And I'm not saying no zero DTE, but if you're trading zero DTE and it's not
Yep.
working for you, go to one DTE.
Sure.
You're gonna, if you sell a call credit spread one DTE, yeah, it's not going to go to zero, but you can sell it for 5, buy it back at 3. You can make a living doing that, and you're not going to get steamrolled.
Yeah, no, those are good points. I think I like the one DTE as well because I'm working with a pretty large group of folks who have under the pattern day trading amount of money.
Yeah.
So the zero DT poses a little bit of a problem, especially for some of the beginners, because they don't know how to box things off and use the calls and puts to get out of things. And I'm trying to prove with a small account that it can be done, right? And there are certain tricks. There are certain tricks, and it's not as easy. I give up a lot of edge, and also I have exercise assignment fees. When I have to box things off with a small account, so I don't go over that pattern day trading rule, which I think is the dumbest rule ever. I didn't say that.
It is. It is.
It's insane. I go on rants on live shows, and the compliance people say don't do that. I said, all right, whatever.
It's special. It's special needs.
It's special needs, right? So anyway, I love the one DTE, assuming you can manage overnight risk. Well, not manage it, but not put yourself in a stupid position, because now you've taken that zero DTE. I mean, sorry, the pattern day trading out of the equation, right? It's done for the most.
Yeah. Yeah. So no, I love this. And so I've been doing the same thing with my daughter. So she's learning to trade. So we set her up a, small account. It's pattern day trader on purpose.
Yep.
But we do a lot of 1DT SPX, and in that, like we did one even today where we sold. So what I like to do with that is 1DTE. 1DTE is, if I'm bullish, I'll sell an in the money put credit spread. So maybe it's $5 wide, get a $3 credit.
Right. Perfect.
So then you hold it overnight, and guess what? If you lose 2 points, you lose 2 points. But you've got time, and I find that even if it's not working the next day, I can kind of scratch it.
Sure.
But yeah, I think it's great. And then also, if I'm doing zero DTE, that's when do the $5 wide butterfly for 10 cents and just let it cash settle. You don't need to worry about it.
Well, yeah, it's a good point. You said the magic word, cash settle, right? Another retail-esque sort of benefit. They don't have to worry about delivery. It just settles into cash. There's no early exercise. I know it's only a zero DTE or one DTE, but they don't have to worry about that either. It's European exercise. So beautiful kind of setup for retail folks.
It's so annoying now when I'll do, because I'll do pinning trades on like some of the Mag 7 stocks, like Meta, stuff like that. It's so annoying that they don't cash settle.
Yeah, right? Wouldn't that be great?
Oh, it'd be awesome.
You can check a box. I said, I'll trade the cash settle ones. I don't want to trade the American.
Yeah, I'm like, what? I got to work this order? Like, God, what the?
I know. All right, let me go take one step back, because I think you said, I want to get the numbers right. You said 20% of the time is directional and 80% is directionless. Or did I get that backwards?
No, so that's and that obviously can differ, but I would say, but I look at basically on any time frame that you're looking at, 80% of the time, let's call it range bound.
Sure.
It's up, it's down, it's testing this, then coming back down.
Sure.
And then you're going to get 20% of the time, what I just call, for lack of a better term, I really like the option term expected move and greater than expected move. And I know technically it's, probably more 70-30, but, I found that 20% of the time you get this greater than expected move. And what I like about those is twofold, is that with a greater than expected move, you can also get the added benefit of a potential gamma squeeze. So, if all the dealers were hedged at, making up GameStop, the classic example, all the dealers are hedged at 50, you get a squeeze and a greater than expected move, and boom, it goes to 70 because all the dealers are covering. Now, if you're a trader, you don't even understand what I said, that's fine. But just know that a lot of times, you can get a move that's maybe a 1.5 times what's expected, but every once in a while you're gonna get something that's maybe twice as much as expected, and it can make it go parabolic simply because of the hedging mechanisms behind it. And a squeeze sets up the odds of that happening increase exponentially if there's a squeeze in place.
Interesting. Yeah, those are great points. Incidentally, in Tradier Pro, where we've loaded in the squeeze indicator, there is a volatility workshop in Tradier Pro. You probably don't know this, but one of the things I added to it was one of my ideas. I'm so happy with this is the dealer positioning. So we do Gamma, Charm, and Vana in there because of what you just said. And
Yeah. Are you guys
you're
doing
right.
it on
The
SPX?
bulk of everyone doesn't understand that, and I kind of travel the country talking about that little squeeze indicator. So I think it's kind of interesting for folks to know, the retail side, to know how dealers behave and what it can mean potentially.
I think for short-term trading, for the traders that understand what you just said,
Yep.
it's going to be a huge. I mean, there's an edge with specific. You know, and I know there's traders out there that say, "Oh, technical analysis is garbage," and there are times when technical analysis is garbage because it's just lines on a chart, right? It's just a moving average. The market doesn't actually see it. But it does kind of give you this, like, you know, the odds. You're looking at the odds, right?
Sure.
Is if you're playing blackjack and the card count's high, you're going to bet more. So, you know, you're looking at all this stuff. But what you just said too is if you understand the dealer hedging and like, okay, what's the charm setup and all this kind of stuff.
Yep.
You just kind of can see like, oh, okay, well, there's probably no way we're going to get through this level today.
Yep.
Or we may end up down here. And that just, again, it gives you a more clear understanding of kind of the playing field, the sandbox of that day. And I think it's just important to know. So you're not doing these pie in the sky trades.
Yeah, no, that's good. So what are some of your favorite things to do right now? Do you have a lot of implied volatility based sort of strategies, meaning, you know, higher implied volatility, you like to do something, lower implied volatility, you like to do something else? Is there something that's kind of working? And the other corollary here is, you mentioned about 80%, 70% directionless. You like to sell premium more than buy it? Do you have a preference, or neither?
Yeah, no, you know, it's interesting because when I started off, I really was more of a momentum trader. I actually really like directionless markets now. And that's especially with SPX, throwing like a 3-day iron condor, you know, take it off, you know, doing something like 4 days out, take it off 2 days out or the day before. And it's a pretty consistent way. Now, the only time you don't want to do that is if there's a squeeze building up and firing, because then you're going to get kind of run over.
Yep.
But I do like, you know, in terms of implied volatility, I actually really like, you know, a lot of people get scared of economic reports.
Yep.
I like setting up trades around them based on premium collapse.
Really?
You know, so, you know, you want to set it up where you got to assume the worst case scenario.
Mm-hmm.
So worst case scenario. So sometimes it might just simply be, all right, we closed at 5,700 SPX CPIs tomorrow. Let's put a $25 butterfly, $50 up and $50 below.
Mm-hmm.
You know, they're $2.
Right.
So if one pins, right, and you know, I think betting on a pin is a little bit of a stretch, but you're set up to kind of catch either move, or you know, selling a very, very wide iron condor.
Yep.
Different things like that. So it's just kind of depends what you're comfortable with, but I kind of like doing that stuff because then you're kind of playing as a market maker versus as a retail by looking at it from that point of view.
Yeah, no, that's great. I think that's one of my little 7 points of success in the retail world, is finding that strategy that fits your personality. And what I mean by that is,
totally. Yeah.
You know, some people, like when I first started in the business and I learned, I had a good tutor, but he was a premium buyer. And I tried to just do what he did. And I got killed. I couldn't, and it didn't sit well with me. I was just getting chipped away at every day on data and just chip. And maybe one day I'd make it back and then maybe a little bit. And then I had learned about premium selling. I'm like, wow, this is better. I make almost every day. And, you know, if you can manage your risk well, occasionally you get hit on a gap or a move, but you're still down there buying business, selling offers as a market maker. And you can kind of make that back quickly. I'm like, this seems better to me, this premium selling thing. Right.
Yeah. I love it because it's like you can put on. So in a perfect world, what happens is a perfect day of trading for me, besides some huge trade, right? Those are always fun. But it's you put on, you know, you look at the day, it's gonna be a little quiet. You throw on some spreads and you're just kind of doing your thing. And every 30 minutes you look up and you've got a little bit more money there.
Yeah.
You know, it's just, you're just collecting that theta. You know, I found that the 2 days I have found, because that have burned me, where like selling far out of the money stuff like that, is FOMC day and NFP.
Oh, okay.
Because I found on those days you can kind of get these big reversals. So on those days, I typically will buy, like, say, it's like buy a wide iron condor and just risk it. And, you know, maybe you get a big flow one way or another.
Yeah.
But things like that, you kind of find it's like, oh, yeah, gosh, if that's not, you know, working on those days, then let's just do the opposite.
Right. Yeah, I find that it's interesting because what's been working well for me lately is the opposite of the short iron condor, the long iron condor. Implied volatility is really cheap. You know, I can get these things for a great price, and I don't necessarily do them right in the day. And I kind of mess around with 0 DT and 1 DT. You know, I do the same thing, and I'm a glutton for punishment, quite frankly. But I've been getting the decent enough moves on these iron condors that are long, and I don't do them, you know, way the heck out there. I do them kind of around at the money, and I'm getting them for a couple bucks like at 11 o'clock in the morning
Yeah.
sometimes.
Okay.
And that's a really nice risk reward. I have all my exit strategies pinned out, right? But you know, a lot of times this SPX will just fly right through the strikes. I'm like, oh, geez, another no-brainer here.
Well,
right?
if you want to put some hair on your chest, well, first of all, I love that idea. I think that's actually because you do have these kind of pops like that, and you know, I think you'll see like if everybody gets comfortable selling premium, that's when the SPX is going to move, 30 points straight up. I've done a couple of those on the NDX, which is, that puts hair on your chest, and but it's what I found with the NDX because it's great when it works, but you just want to do it where you just assume you can't get out. So typically it's more, buy a cheap out of the money something, and then assume you're not going to be able to get out. So position size, and then sometimes we've done it before where you buy 50 wide on the NDX with 15 minutes left for 4 points, and it goes all the way. You're just
That's
like,
crazy.
Wow, I'd love to be able to do that every time, but crazy moves.
That's nice. All right, good. So the Squeeze Pro is coming to, I think it's already in the Tradier Pro with us. You have to be a subscriber from what I understand. I'm going to get more details when we do another one of these and roll it across the screen, or I'll get the details and roll it across the screen at the end.
We'll both know a lot more in a week.
I think you're right. So, but I did see it. I work closely with the developers, and I did see it. It looks great. I'm not sure I understand it yet, but it's awesome. And I know you kind of described it as a Kelter channel. I forget the other components in it.
And I can send you a screenshot with kind of a couple of examples too, just to so
Perfect.
If you want to, you'll as soon as you see it, you're gonna be like, yes, got it.
Okay. And I love the idea of the not minute chart, because everyone in the world wants to use a minute chart. Why do you guys use minute charts? I don't understand that. I can't think that fast.
The best trading hack in the world is to burn your 1 minute chart.
I love that. Great words to live by. Burn your 1 minute chart. I love it, John. All right. Well, we're going to run out of time here. Anything else you want to kind of get across before we say sayonara for the day?
No, first of all, Lex, thanks for having me on here. I love what you guys are doing at Tradier. And, I think the idea of, I remember back trading and paying very high commissions. And so it's really cool just to kind of see things like where you can actually just trade and not worry about things like excess commissions being a huge part of your costs and things like that too. And,
awesome.
And we're over at Simpler Trading, just kind of doing our thing and doing trades. And, we all love what we're doing in terms of trading and appreciate, guys like you that are out there doing the same thing.
Thank you. Yeah, that's great. And thanks for coming on. Simplertrading.com. I got that right?
Yeah, it's not simpler like Tradier.
Simpler, right?
Simpler, yeah.
Simplertrading.com. And you're not doing much in the rooms anymore. You have a whole bunch of educators who are doing their thing in various, I'm calling them rooms, but correct me what it is.
Yeah, so we go back and forth. I'll help out in the Simpler Central room. If I see a trade, I'll post it in there.
Okay.
I think we might be about to launch a service with my daughter, kind of a small account kind of thing, because it's fun. She and I have fun working together. I'm like, do you want to do something like this? She's like, she doesn't, but I think it'll be good for her. So we'll see.
Okay. Awesome. So good. I'm so happy for the collaboration. This is going to be great. Let's do another one of these. It was really great talking to you. And if you're in the mood someday, we should get together on a stage and do a little talk together. Because when you brought up dealer positioning, that's right up my alley, and we could do something.
Oh, that'd be awesome. Yeah. And frankly, it's stuff that I think as a trader, you always want to be a student. Yep. And since I didn't grow up with that background, it's stuff that, I always love hearing about it from people who really understand it. Yeah. And that helps me increase my knowledge of it as well.
Couldn't agree more. That's awesome. All right, John, thanks for coming. We'll talk next time. And it was a great show, great episode. Appreciate it.
Yeah, awesome. Thanks, Lex.
All right, man.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.